Arnaud Scarpaci, who's a fund manager at Agilis Gestion in Paris. He joins me now. It must have been quite a nerve-wracking day for you yesterday.
Yes, I'm not worried about the decline of Societe Generale stocks because even there is some rumors of Daily Mail newspaper due to buyout owing to huge losses concerning Greek loan losses. We can consider that Greece could extend its fixed income swap plan to include longer maturities, and credit default swap have dramatically risen, and notably on French banks. We are not worried because AAA of France has been confirmed by the three main rating agency.
But I mean, Societe Generale, we know from its results just last week, it still has €1.5 billion worth of Greek sovereign debt on its books. It's got, of course, a Greek subsidiary bank as well, where bad loans remain quite high and problematic, unsurprisingly. I mean, you must have some concerns perhaps about the future of this bank, not least because it also scrapped its profit targets as well just last week.
Yes, the Societe Generale has launched a profit warning a few days ago, but concerning this bank, government has confirmed that rumors have been unconfirmed. Societe Generale has confirmed that this rumor have been wrong, and the Daily Mail newspaper has apologized about the French bank.
The French government, we saw President Nicolas Sarkozy interrupting his summer holiday. He got his ministers over as well. Prime Minister, Finance Minister, Budget Minister said, we need new budget measures, new austerity measures to convince the market that we will hit our budget deficit targets of 3% of GDP by 2013. Do you think that is going to be enough to reassure investors, to reassure the markets?
The issue is not indebtedness in France, because if we compare public debt in France and in Germany, it's close to 83%, and it's similar. The issue in France is growth. We have bad figures yesterday about industrial production, and we will have figures about French GDP and all countries in Euro area, and we have to monitor these figures.
Well, we're looking forward to those figures tomorrow, and we'll be covering them live here on the show as well. Just very quickly, would you be buying more shares in Societe Generale and other French banks right now? They must be cheap if you think there's no reason for the falls.
Yes, they are cheap, and I think we must even hold or buy these shares, because this balance sheet is healthy, and I think we have to monitor markets, because when you have a stock like Societe Generale who declined more than 20%, the market has been to be hung up, and I think we have to monitor into account short selling, because short selling have to increase volatility, and on this market we have found can be long only, other which can hedge their portfolio, and short selling there is very few hedge funds which can this agreement.
Okay, Arnaud Scarpaci, thanks so much for joining us from Agilis Gestion here in Paris.